Guys, Christian here, local Vancouver real estate agent, and for today's video I want to talk to you about what's going on with the market. And there's a lot going on right now, and I want to bring you up to speed on it. So first thing is, interest rates have been climbing and house prices have been going in the opposite direction. I can share a short story that really illustrates this. Just this last early in June, I actually helped a client buy a townhouse in Surrey. And we ended up getting this townhouse for about $100,000 less than it would have cost us back in February of this year. So we've seen a real drop in prices. And I think this Fraser Valley has been sort of the focal point, the epicenter of that. And so, I mean, the numbers when they came out in May were a drop of 63%, which is huge. So the fact that you're seeing a lot less sales. Now, why is that happening? You have to remember too, the Fraser Valley, a lot of bedroom communities, they saw incredible run-ups in prices. In some cases, townhouses, detached homes up 50%, which is a hell of a lot. So the fact that things are now starting to pull back a bit makes perfect sense. I was surprised by that number. And it obviously is being driven by the interest rates. And I think also the fact that the market had run up so much. I mean, it has to take a pause. It has to take a breather. And a little bit later in this video, we'll get into some money math, and we'll get into some examples of like mortgage amounts, and if the interest rate goes up by this much or that much, what is the actual dollar figure on a monthly basis to you if you're out there and you're thinking about getting into the market. Now, how does Fraser Valley compare to the Greater Vancouver Area? Well, the Greater Vancouver Area, so that's everything from Vancouver, the west side, right out to Maple Ridge. Obviously, the sales were down there as well. Sales were down in about 30 to 35 and 40% in certain areas. Now, we didn't see the price drops as much. Like I'm seeing pockets where it's down 1% month over month. That's not going to make a big deal, right? That's a $2 million house selling for $1.98 million. That's what 1% does. It made that $2 million house $20,000 cheaper. But you're seeing bigger price drops in Fraser Valley, just like that analogy or story I just gave you of the client I helped, where we got a smoking deal here on the townhouse just by waiting 3 months. And the price drops in Surrey month over month, and the Fraser Valley, Langley, Abbotsford have been 4%, 5%. That's significant, right? Now you're coming down $100,000. So I've seen that. Condos, for example, in the Fraser Valley were selling in the mid 600s, now selling in the 580s. I mean, that's a significant drop. So we'll have to follow that market. If you are looking for a home in that area, boy, time is on your side right now, especially the next 2-3 months. A lot of buyers get really, worried, and they get all, there's a lot of psychology to these types of markets. Buyers will want to wait and see if there's a bottom. Of course, nobody can ever really predict it. What happens is you get this big long waiting game, and if you're someone out there and you have the stones to move forward, and you have the financial qualifications and you have the desire, I think that's the big one. Just wanting to have your own home, or maybe your wife is 7 months pregnant and now you want your own space. Well, now you're going to move ahead regardless, right? And all of those factors, boy, you might get a really nice property here. Seller may need to sell. They're taking a job in Calgary. They got to get moved. And hey, you might come in. You may be the only one making an offer. And we just had this. I had this on a house here on the east side of Vancouver last night. A beautiful house. We went to the open house. There must have been 20 groups that went in to see it. Very busy, very nice home. Nice, good, about 50 feet wide front lot. So just a nice fat property, good size house, and they did not get one offer on it. And so if you get that seller who's really keen, they're kind of desperate to sell, boy, you might get yourself a good home at a great price. Okay, a few other things I want to talk to you about. I'm getting the question a lot, should I wait? I think waiting depends on what you're buying. It also depends on your situation. If you told me I want to buy a luxury condo downtown Vancouver, Cole Harbour, Waterview, which is going to cost you $1.8, $2 million, time is on your side. Okay, the next 6 months are going to be a great time here because you're gonna be able to pick what you want. You might be able to really shave a lot off that price point. I think also if you're buying luxury on Vancouver's west side, if you're in that 4 million plus price point, you're not competing against anybody. It's you and only you. And so time is on your side there as well in the next 6 months. If you're buying a 2-bedroom in Vancouver or Burnaby and you're hoping to get it for like $800,000 or $850,000, I would say you want to be just moving full steam ahead, because most buyers are in that category anyway. Like 80% of the population is there in that, they want something cheap, low price, and that we call that the entry level market. And that's not going to, that has a bottom to it. It can't go any lower because there's just too many buyers out there for it. I just had a kid's condo that I sold, and same thing. I had agents calling me saying that the market has slowed down, and we got 11 offers on it. We sold it almost $100,000 over the asking. And this is a 40-year-old building. So there's just so many buyers for certain 1-bedrooms, certain 2-bedrooms, especially when you're at the low price points. Like you're looking at $650,000 for a 1-bedroom in a good neighborhood. That's going to sell, even in a climbing interest rate environment like we have right now. All right. How is this all going to play out? Hard to say for sure. There's this economist for the CIBC that I think makes a lot of sense. His name's Benjamin Tal, and he sort of pegged the next 3-4 years as, well, maybe we're going to see prices pull back 5, 10, even 15%, because we had this run up of 50%. Really in so many areas in the country, and then we sort of flatline there for about 3 years, and then we see a run up again because there's so little inventory. Supply is so tight. I think that's a really good way to look at it, because supply is tight. I mean, I was doing a search for a client today in Burnaby, and I think I found, for the types of houses that they're interested in the entire city of Burnaby, right? This huge city right next to Vancouver, as you know, if you live in the area, 83 homes, 83 that would be suitable for this client. That is not a lot of options. So if this market is slow and flatlines for 3-4 years, and all we have is 80 to 100 homes in the market, that's not enough supply out there with the amount of people moving here. So you would see and I think you would see an increase again, 4 years from now, once we get through this high inflationary period and these increased interest rate period. Now, what else? If you're a buyer out there, I definitely think you want to lock in your interest rate if you are thinking of getting a place. I've had a couple of clients, a couple of meetings. The Bank of Canada is looking to increase their rate. They're talking about it. If you read the business section of the Globe and Mail, it does sound like that. They might even increase it 75 basis points. Wow. I mean, who would have thought a year ago that they would be increasing by those numbers? Anyway, you want to talk and connect with your mortgage broker and lock in a fixed rate, just in case that's the way you want to go, because after they increase the rate, the banks obviously will follow suit and you'll be paying a lot more. Now, if you were thinking about getting a variable rate, and you kind of get the heebie-jeebies about the fact that your mortgage amount will increase on a monthly basis when they raise the rates. One thing you can do is you can get what's called a variable rate with a fixed payment. I know I've had a couple of these before. TD Bank does this. I don't think Scotia does this, but that would be something that you could do for yourself. That way you can sleep at night if that's going to keep you up. All right, so that's called a variable rate with fixed payments. Also, when you're making an offer, you definitely want to have an offer now with subject to financing. The reason for that is, as part of the financing, the bank is going to call out an appraiser to appraise the property. And when we are in an environment where the market is declining rapidly, like in the Fraser Valley right now, appraisers may underpraise the property. You buy it at $800,000 and they say it's worth $720,000. You're going to have to make up the difference. It's got to come out of your pocket, your bank account. You're going to make up that $80,000 difference. So you definitely want to have subject to financing in your offers at this point. Okay? And the last thing I want to do, just do a bit of money math with you. Okay, so we talked about what is, I want to do this because, we talk about increasing interest rates, and what does that mean? What does it mean in dollars? Because that's what's important to us, to you, to me. So if you were out there and you were going to go and get a $700,000 loan from the bank, okay, because you're buying a townhouse somewhere, and the bank now quotes you a variable, and the variable is at 2.74%, your monthly mortgage would be $4,800 a month. Sorry, that'd be $2,848 per month. Now, let's imagine here on July 13th, the Bank of Canada increases their rate by 75 basis points, taking your variable to 3.49%. That means your payment will increase by $252 a month. So that's you and your sweetheart now are going to be paying $3,130 per month. Now, if you're a couple and you're both working full-time, or one of you or both of you are professionals, I think you're still going to be able to manage, right? However, think about that. A lot of people may cut back on their spending, and I guess that's what the Bank of Canada really wants. That's the purpose of increasing these rates. They don't want us to spend and thereby curtail and slow inflation. How about if you had $1 million mortgage? So you're going to buy a house somewhere, Fraser Valley. Maybe it's in the Greater Vancouver Area, Burnaby, for example, and you're going to get a $1 million mortgage with a variable rate of 2.74%. Your monthly payment would be $4,069, which, to be honest with you, is still pretty damn low. And think about it. A lot of houses, you can actually rent out 2 bedrooms in the basement, if not one. And if you can get $1,500 to $2,000 a month, you're only paying $2,000 to support that $1 million mortgage. That's not a lot. That's about what you pay to rent a 1-bedroom in downtown. Even less in some cases. Now, if the rate here goes up to 3.49%, again, we're factoring in a 75% basis point increase on July the 13th, that takes you up $402 a month. And your new monthly payment would be $4,471 a month. And obviously $400 a month more, or $5,000 a month, a year more. So that's going to be a lot more money. For a working couple, professionals, the kind of people who are buying houses, I don't think that's not gonna break the bank. They're gonna be able to get through that, especially if they've got a mortgage helper or two in the property. However, as these interest rates go up, of course, I think that the psychology starts to set in. People will start to cut back on their spending, and that will slow the economy and possibly put us into a recession. So let's see what happens. I mean, those are just a couple examples there in terms of the money math. If you enjoyed the video, give us a thumbs up, and we enjoy having you, and we'll see you next time.